What if I told you that a single price for just one commodity could be a signal, a sign of a massive shift in our entire financial world? Well, that's exactly the theory we're diving into today. It all points to one very specific number, acting like a warning bell. So picture this. It's December 27, 2025. We're all winding down from the holidays, but according to the analysis we're looking at, something significant happened. Silver, it quietly crossed $80 an ounce. Now, for most of us, that's just a number, but for folks who study historical patterns, it was like an alarm bell going off. So, why? What's so special about $80 silver? So, was this just a random price jump, the kind of thing that happens all the time in the markets? Or was it a real signal? A sign that we're hitting the peak of a long, predictable cycle, one that's played out again and again in American history. That's the big question we're digging into. Okay, before we get in any deeper, I need to be really clear about something. What we're talking about here is a summary of some historical analysis. It's all about pattern recognition. This is absolutely not financial advice. My job here is just to lay out the argument from the source material so you can see it and make up your own mind. All right, so the whole foundation for this idea, it's all built on a fascinating concept, a recurring 80-year cycle in our money system. So let's unpack that a little bit. This idea is called the fourth turning, and it was made famous by a couple of researchers, Strauss and Howe. What they noticed was that history doesn't just happen randomly. It seems to move in these big cycles, about 80 years long, about the length of a full human life. And every single one of these cycles ends with a huge, transformative crisis. And each 80-year cycle is broken down into 4 parts, or turnings. First, you get a high. Think of that post-World War II era of confidence and stability. Then comes an awakening, when people start to question things. After that, you get an unraveling, where our institutions start to feel a bit frayed. And that leads right into the final phase, the crisis. This is where the old way of doing things gets torn down so something new can be built. And the analysis we're looking at, well, it says we're deep inside that crisis phase right now. Okay, so that's the theory. But let's look at the history, because this isn't just some abstract idea. The research points to real, specific moments in American history where this exact cycle seems to have played out. And when you look at the timeline, it's pretty remarkable. Right around 1781, we had the Revolutionary War debt crisis. The Continental dollar collapsed. Fast forward about 80 years, you get the Civil War and the Greenback crisis. Then another 80 years or so later, World War II and the Bretton Woods Agreement, which totally rewrote the rules for global money. I mean, the pattern is just striking. And if you follow that timeline, it puts our current time right on schedule for the next big one.
But it's not just about the 80-year timing. What's really wild is that each of these crises had the same recipe. You had massive government debt, you had experiments with paper money that wasn't backed by anything real, and in the end, every single time there was a fundamental reset of the entire money system. And here's the kicker. It almost always caught the public completely by surprise.
Which, of course, brings us to today. Because looking at history is one thing, but according to this analysis, it's the numbers, today's numbers, that tell the most urgent part of this story. So let's start with the big one, the U.S. national debt. The source material we're looking at puts it at a jaw-dropping $38 trillion. Honestly, it's a number so big, it's hard to even wrap your head around it. So let's try to make it make sense. According to the analysis, that number is going up by about $6 billion every single day. No, that's not a typo. $6 billion a day. But if you really want to feel it, it breaks down to over $70,000 every single second. And the argument here is simple. The math just doesn't work. The sheer speed of it makes the current system fundamentally unsustainable. Okay, we're about to look at what this theory suggests could happen next. By the way, if you find this kind of breakdown helpful and you like our videos, please do us a favor and like, share, and subscribe to follow us. That way, you won't miss any exciting updates. All right, so if the math is unsustainable, what's the next step? Well, history doesn't just point out the problem. It also seems to show us a very predictable pattern of how governments react when they're backed into a corner like this. And this is the part that a lot of people don't know. We've all heard about the government taking gold back in 1933, right? But did you know that just a year later, in 1934, they did almost the exact same thing with silver? President Roosevelt signed an executive order requiring people to deliver their silver to the government. So this isn't just some wild theory. It's literally happened before. And the response seems to follow a familiar 3-step playbook. Step 1, denial. Officials insist everything is fine, there's no problem here. Step 2, blame. When the price of silver, for example, just keeps rising and they can't ignore it anymore, they find a scapegoat. It's the speculators, the hoarders, you name it. And finally, when blaming people doesn't work, step 3, intervention.
Now that intervention can look like a lot of different things. It can be subtle at first. Maybe they change the rules on futures trading or tweak the tax laws to make it less attractive to own silver. But the historical playbook shows that in extreme situations, it can escalate all the way to mandatory sale requirements, exactly like what happened back in 1934.
Okay, so that brings us to the last, really crucial piece of this puzzle. Because we have to remember, silver isn't just money. It's not just something people buy when they're nervous. It is a critical industrial metal, and that creates a whole separate story about supply and demand. Just look at these numbers. More than half of all the silver that's used every year goes into industrial applications. We're talking about solar panels, electric cars, all of our electronics, your phone, your computer. This isn't demand that can just be switched off. Our modern world needs it to function, and that need is growing fast. And that creates a huge squeeze. Because on one hand, you have demand from industry and investors going up, but on the other hand, the supply, the amount of new silver actually being mined, has been basically flat for the last 10 years. You don't have to be an economist to see where this is headed, right? More and more people need something, and we're not making any more of it.
You know, when you take a step back and look at the big picture, the source material points to a very simple and frankly humbling historical truth. No monetary system has ever lasted forever. Every single currency throughout all of history has either failed, been replaced, or been completely restructured. It always happens. The only real questions are when and how.
So, that's what it all comes down to, really. Is this 80-year cycle a genuine map that can show us what's coming around the bend? Or are these just faint echoes from a past that doesn't really apply to our modern world? Is this time different? Ultimately, that's a question you have to answer for yourself.
Thanks for watching, and as always, stay curious.